The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up, Dow Industrials down 370. NASDAQ is off 37. S&Ps are off 33. Gold's up by $21, trading $17.26 an ounce. We got silver flat, $17.88 an ounce. Light sweet crude off 13 cents, $38.07 a barrel. Notes and bonds. You get some big moves out here in the note and bond market today, folks. It had broke the consolidation last week. It's going to try to get back inside it right now. You get the 10-year right now, 18 ticks, 137.28. The 30-year, folks, is up a full 2 points, plus 2 ticks at 174.30. And King Dollar just can't handle price. Down 230, 96.388. The euro is at 113. The yen is out here at 107.78, and the British pound is at 127 to 1 U.S. dollar. If I didn't know better, folks, okay, this market's the big stocks are actually trading like penny stocks. They're up $7 one day, next day they're down $4. Pretty amazing, Tom. I mean,
so what happened, man? Everybody heard the headline that the S&P is actually positive for 2020, and they said, hold on, and they tapped the brakes a little bit yesterday, last night, maybe this morning, but still remarkable, man. We're flirting with 3,200 in the S&P, and the Nasdaq. I mean, when's 10,000 coming in the Nasdaq 100, man? The NQ is right at 9,900 right now.
And the NQs, folks, so the battle's going to be in the NQs. They're buying their FANG stocks this morning, hand over fist, even with the S&P down 34 points. And then we talk about defined risk, folks. Bottom line, let's go over to our man, Mr. Kevin Hinks, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, TD Ameritrade, Kevin and his team, great program. You want to understand the option market, option strategies, futures. You're sitting on the site right now. You can test drive the platform. Great platform. Just hit the button, bring it up. They'll allow you to trade paper money every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, I got an interesting screen I'm looking at right now. I see all the risk-off assets are up, right? Bonds, VIX, and gold. And all the FANG stocks are up.
I know, man.
Yeah. Pretty interesting. The day we have forming here, the NASDAQ futures are now positive, and the NASDAQ composite is down 0.1%. It looks like it wants to go positive any minute here.
Yeah, this is going to be an extraordinary battle out here today, folks, because the bottom line is that when you see this type of buy-in, you know, whether it's Google, whether it's Facebook, whether it's Netflix, they're buying there. So the battle in between this NASDAQ and S&P and the Dow is going to be pretty extensive. You know what's wild, Kevin, is that when I was starting off saying that they're like penny stocks, it's blowing my mind. I mean, United, okay, is down $6. You know, now granted, it's been up like $15, but these stocks, man, I mean, you know, I feel for someone that's in them right now, but we know it's a momentum market. But these numbers, like, are pretty amazing, like, overnight. Like, it was valued at something yesterday, and today they decide, you know what, it's 15% less.
Yeah.
Wild.
Yeah, I mean, I think Tommy had it right. I think the investing public saw the headlines overnight.
Yeah.
That some of these indices had gone positive for the year, and that knee-jerk reaction to that just caused a pause.
Sure.
Now, is that the most efficient way to trade this market? No, probably not. I mean, if you shorted any of the FANG stocks today, they're punishing you pretty good.
Oh, yeah.
There is some dust that needs to settle today for sure, but the E-minis are down 1%. This is not a catastrophic move on the downside here.
No, and what seems to happen is that, you know, each and every time that we do pull back, the bottom line is that if we looked at the amount of days, when I even listened to Tommy's program this morning, the amount of days that we've been up versus we're going back, you know, the bottom line is that when you're looking at 1%, that's nothing, man, right? I mean, really.
I think it was 14 out of 17 days in a row coming into today, we were in positive territory, with the Dow adding almost 5,000 points since May 14th, man.
Yeah. You know, Kevin, what is intriguing is that, you know, when we were up so dramatically, that's on Friday, But the VIX started moving up, man. I mean, people started basically protecting their positions. So that was pretty intriguing that the VIX could pick that up so quick, man.
Yeah, exactly. I mean, that was certainly an indication that, people were starting to buy protection.
Yes.
Right? There's really no other way to say it. When the market is up and VIX is up, people are net buying options. Now you can define protection a lot of ways, but make no mistake, they're buying options in the S&P, in the SPX.
Yes.
So they're net buyers, and that's causing the overall volatility to tick up here.
Yeah, you can see it in spades too, and of course we've kicked into the summer, so it is pretty intriguing that the bottom line is that we have that moving up a little because it's going to be interesting. We know that. We're in the summer, folks. Once you move into July 4th, though, man, I mean, that's going to be right around the corner.
Right.
You got dead markets.
Here before you know it.
Yeah.
And you still got a 27 and 27.33 on the VIX. That is a summer trading gift.
Yes. And what Kevin's saying, you're going to get the decay on that, folks, because the bottom line is that as things just, settle down, go sideways, it's pretty intriguing because the aspect of the market in general, I mean, if we take a look at it doesn't matter which indice you really look at. Even being off $34, it almost is like a sideways move out here, when you basically take a look at it. So
exactly right. At the end of the day, higher implied volatility, which is what the VIX measures, means higher levels of premium in the options, which means higher levels of decay if you're a net seller in those options.
Yes.
That's not something you historically get in the summer.
Right. Well, it's amazing, Kevin, and I know that TD Ameritrade, they've got, huge amounts, hundreds of thousands of new accounts. It's really intriguing to me, and I had said to Tommy, this is even a couple of years ago, I couldn't wait for the new crowd to come in. And that's another thing that I'd say COVID has brought in. I mean, we have a whole new trading crowd, man. And it's probably like 40, 35, all the way down. I mean, when you and I started, we were the baby boomers going up. But now this crowd here is actually bigger than the baby boomers, which is amazing, man.
Yeah, I think this sell-off did bring in a lot of new investors. I can say that for a fact because my children are getting involved in the markets more than I ever thought they would at this point. But, it's amazing the amount of conversations I'm having with my children.
Isn't that cool?
On markets, yeah. It's pretty neat.
And, of course, they got their cell phone. They can do everything right on that cell where we had those big freaking monitors. And
Exactly. I mean, they can be in their account and taking advantage of a move in seconds. Virtually now, the strongest computer you've had is in your hands and in your pocket every day.
I know. It's pretty cool, man. I mean, and for the business, it's really cool because the bottom line is that then you have more buyers and sellers. And of course, with commissions at zero, well, I mean, folks, if you go back 30 years, we were either paying, $67, $125, or $250 just to get into a position. So pretty amazing.
There's never been a better time to be a young retail investor.
Yeah, there's no doubt, man.
Gotta love it.
Yeah. Folks, 45 minutes from now, Kevin, we look forward to the program. You have a great day, safe day, and, of course, we'll look forward to the program and talk to you tomorrow.
Thanks for having me on, guys.
Thank you.
Thanks,
Kevin.
Kevin.
Yeah, folks, Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 332. You get the Nasdaq off 42. S&Ps are off 32. And so check this out. You know, Tom, when I was on the air yesterday, right, this is the ultimate and, you know, that the type of stretch that we have in the marketplace, folks. So tailored brands, right?
Okay.
This was like so crazy. You hardly ever see this, folks, that something like this actually happens. But it happened yesterday when I was live on the air, actually. So picture Tailored Brands. Now, Tailored Brands, folks, is Men's Warehouse. They own a lot of others. But they're bottom line, you know, the equity, you know, if we take a look at this, we just bring this back and you'll see the...
And it was the two of them, right? It's Men's Warehouse and the other one they combined, and that was basically the worst decision they could have made as it fell out of bed right as that came together, I think.
Exactly. So in 2015, Tailored Brands was $66. And 2018, May of 2018, so, you know, 2 years ago, it was at $35, okay? Bottom line, it goes down to a price point of 88 cents. Well, what you had here, and this is when markets were open, folks, yesterday, okay? So the equity goes up to $2.45. Now, it goes to $2.45. I'm on the air live. They come across saying that they think they're going to go bankrupt, right?
Oh, man.
And guess what, folks? This is what was so crazy about this. This is why it's telling me we really are very close to a top. Is the stock doesn't go down. The stock still was positive, okay, at the close. I mean, it ended up being up like 12 cents versus 45 cents, okay? Well, needless to say, I guess it took overnight. I mean, it's 28, it's $1.30 now, and it was $1.45. But that is so, like, crazy. It's like...
And it was, Joseph A. Banks was the other term we were looking for. So Men's Warehouse, let's see what year it was even. They acquired them for $1.8 billion. Can you go back to that for a second? What's their market cap right now? I'm just curious what they're sitting at.
$1.8 billion. Can you imagine?
That's what they acquired. Yeah, $68 million. I thought it was going to be pretty negligible.
Million. Oh my God.
Yeah.
Yeah.
And I think that was in 2014. Yeah. So we'll talk crazy charts, man. I had one this morning. How about AMC and movie theaters?
Oh, I love this story, Tom. Go ahead. This is sick. That's even better than tailored brands.
And it's great. You just stumble upon things, right? One, down the rabbit hole we go. I had no plan of pulling up AMC. I pulled up one article, and why not here? I'll go through it because this is a cool article to talk about. Not cool, but in terms of informational. As many 25,000 stores may close, and then the next one, which kind of is correlated, is that the debt shakeout's poised to make giant retailers even bigger, but talk about closing. And I talked about the fact that AMC had been in a lot of trouble, and you talked about Amazon maybe picking up AMC, right?
Yes.
Well, I pull up the chart. And yesterday, I mean, talk about a charge higher yesterday. You made it actually as high as 684. Now, this chart here I have here, this is a daily. The dotted line here represents January 1st, okay? So the beginning of this year, before COVID, and I guess COVID, right? Late February, February 21st, you see the drop off, okay? But man, oh man, in the month of February, prior to COVID even playing into the environment at all, you had AMC at $6.40 on February 3rd. You had it at $6.39 on February 4th, and you were above all those prices yesterday. What is going on, man? Who was buying this stock yesterday that wasn't buying the stock in February when movie theaters are empty? And that business plan is going to take a while, man. You are not going to see packed movie theaters for 12 months, period.
That is about as twisted as you can get.
I would love to, phone lines are open, folks. 877-927-6648, because how does that play out? And that's where you really just want to watch those types of moves, man. No matter what's going on, they're in a lot of trouble, and they've been in a lot of trouble in terms of a shifting focus anyway, right? People like staying at home. The movie theaters now, which is why Disney has done so well, you really got to have a juggernaut, whether it's Star Wars, Marvel, right? Some big Tom Hanks, Tom Cruise, Mission Impossible types of movies where you can be in a theater and experience it to really make sense. Otherwise, man, they're releasing movies, Martin Scorsese, straight to Netflix. So they were already in trouble. Just remarkable that you're actually at pre-COVID levels in AMC, which was already in trouble. How's that? I don't know. Hey.
Yeah, listen, man. When I was listening to that this morning, that's the ultimate, and what that is, and that's why I actually brought up. We got a whole new slew of traders, right? The bottom line is that it's always, what are you buying? What are you selling?
Sure.
And when we talk about investing, folks, okay, you have investing would be like 5-10 years, okay? The bottom line is that everyone that's trading, okay, you better understand you're in the probability game, because you're gambling, okay? You can say, some people have gambling as a bad word. To me, that's not a bad word if you have a probability deal going on, okay? You certainly don't want to go to a casino and play the slots, okay? But
No, listen, and you're exactly right, man. Everybody associates gambling with a negative expectation. Here's the difference, right? That's what they do. They say in their mind gambling, and they think if you gamble, you have a negative expectation, because if you gamble at slops, blackjack, craps, roulette, you have a negative expectation. The more you do it, the more you're going to lose in the long run.
Right.
But if you gamble on something like, if somebody says, here's a coin flip, but I'll give you 6 to 5 odds on heads or tails, you pick. I'll flip that 1 billion times on those odds, right? And I will gamble on every flip, and I'm going to lose 50% of them, man.
Yeah.
But guess what? I'm going to make $6 every time I win. I'm going to lose 5, and that's the type of, so gambling just as long as,
There's no doubt, no doubt.
Yeah.
Let's go to Ken in Florida. Hey, Ken, what's going on?
Hey.
Hello?
Maybe not Jupiter, Florida. Hey, Ken.
I have a question, and it's because I haven't seen anybody addressing this, and you guys are in the real estate field also. With all the riots that have taken place, especially after many businesses were closed, not generating any revenue, some people are under the impression that insurance is going to cover all these damages. I'm a former property and casualty agent, and all these commercial policies, everyone I used to sell, excludes civil unrest. So these people that may have experienced hundreds, if not hundreds of thousands of dollars worth of damage to their stores, and
well, I'm not sure what insurance company you work for, but I get a lot of insurance, and there's not one policy that excludes civil unrest. So
really, it's Insurance Service Organization ISO.
Yeah.
The ISO standard. I mean, it's in every policy, and you can check with another agent just to verify. However, civil unrest.
Well, maybe. I mean, I guess what the difference is that the aspect. What's the difference of some kid running down the street, throwing bricks through a window, and you're claiming it?
Civil unrest.
I'm sorry, what?
That's vandalism.
Okay.
But when you're talking civil unrest,
so I'm trying to figure out what's the point here.
Well, the point is, I'm just curious because nobody's talking about how this is.
I think they're going to be covered. Not to jump in, just doing some Googling, we can get, but on CNBC has a big article up there talking about insurers say riot damage is covered under most insurance policies for business, coming in at property damage. So however those caveats are in there, it looks like that's going to be covered, which is why you're probably not hearing it talked about, Ken.
Oh, okay. Well,
yeah, which is good because they,
I'm
that's
happy that
totally.
covered.
Have a great one, man. Have a
Thanks,
safe
man.
one. Stay right there. Tommy and I are coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down at down 300. Nasdaq is down 26. S&Ps are up 28, and that NDX is still in the positive field, folks. Let's go to Jose in Florida. Hey, what's going on, brother?
Hello? Is that me?
Hello?
We got ya.
We got you.
Oh, sorry about that, comrades. I was Natalie Wood was trending on the internet, and when that happens, you got to stop everything. And what a tomato!
Oh my
Goodness gracious! Hey, Tom, let's dissect live on the air Microsoft. What kind of volume do I need to get over the high 190? Because Apple Computer, its sister. That thing is on fire!
It is. It is.
Yeah.
So looking at Microsoft, it's flat out here today, but it does have a high volume high at 190.70, and that's 53 million. So I suspect it's going to at least test it. That's how this thing is setting up, so.
190.70, yeah. If someone wasn't listening, they might have thought you said 197, and they'd be bummed out.
Yes, thank you.
All right, good deal.
Yeah, no, listen, it's intriguing, and as Jose was just saying, folks, there is no doubt Apple, this is what's holding the NDX up today. I mean, Apple, is up $4.35. It blew away its last high in February of 327. You're at 337. You're $10 over it right now, so.
Yeah, I'm thinking 345 before they sell it off on Apple. But, hey, Tom, I've been messing with Cadence Design System for the last couple of years. Went from 45 to about 93. CDNS. Is this a candidate for a stock split? Is that what they're driving
Give me
here?
that. Oh, I got it. CDNS. Okay, let me see this.
Cadence Design System.
Yeah.
This thing has been an animal for the last couple of years.
Yeah, so you're at 91.81. Wow. Okay.
Is this a candidate for a stock split? Is that what they're thinking?
No, this is strong. There's no doubt about this. 1 second. So you took out the whole consolidation. Yeah, I mean, this is at all-time highs. I mean, yeah, it's powerful, man. I mean, let's see.
It's ripe for a short, but you got to wait until the NASDAQ runs out of gas.
Yeah, I mean, this company prints money, basically. Do you know what I mean? Because they have great software. There's no two ways about this, man. Yeah, I mean, I wouldn't be shotting it right now, that's for sure.
No.
I just let this run for a bit. And just as you said, what ends up happening is that the market itself would have to basically start taking a hit, because they're making some bread. Cooking, brother.
Yeah, Tom, does Newmont get into the 60s? This go up?
That's it. It looks to me that the run basically is on, yeah. What we did here, they both, Newmont's up today, Barrick's up today, the South African equities were up even before we opened. So I'd say that the run is on. And the real question is going to be this dollar. What had happened yesterday, folks, is this. The dollar tried to get higher, couldn't do it. Today, you got some big action on the way down. We just broke the swing point about 10 minutes ago. We're at 96,400. I mean, this thing looks like it's going to go to this 94,650, and that's on the shorter-term basis. The longer-term basis looks like it's 88. If it's 88, man, gold's going to go break its highs. So we'll see if this is the run or not.
All right. So if gold does go to 94 and then 88, that's going to fuel the Dow, is it not?
It's hard to comprehend, man, because what tends to happen is that sometimes, like the last time when we would get smoked in the marketplace, right? The gold equities performed differently than they did in 2008. We definitely went down. We went down big, but not right like they did in 2008. So they went down less than the rest of the equities. On the way back up, they went up about the same. There are a lot of these up like 100%. So that's a toss-up, man. I mean, what his question is, folks, is this, is that what does happen, and we've seen it happen, is that if gold equities are going to go to higher price, most times the indices themselves have to go to higher price. So.
I hope there's a decoupling. All right, comrades.
Okay, man.
Onward and upward.
There you go, man. Have a great one. Have a safe one. This Nasdaq's something else, Tom, isn't it?
It is, man. I mean, Kevin Hinks mentioned that the Nasdaq's trading with risk-free investments. And is that what's happening, man? Are the FANG stocks, right? The FANG stocks are trading like they're risk-free, man, as in, FANG are up, risk-free assets are up, and the market is negative.
Now, listen, man, it's, you get Facebook leading the charge. It's up 2.8%. You get Dexcom up 2.7. Vertex Pharmaceutical is up 2.5. Now, taken away from it, United's taking quite a hit, man.
Those airlines.
Yeah, that's down 10%. Marriott's off 4.5%. Expedia's down 4.5%.
And just to throw in there, too, Amazon making new all-time highs almost every 5 minutes right now, man. You don't get to say that often, but it's the reality.
This is another major breakout, too. Yep, you're already $25 over the breakout. Unreal.
Yeah.
Yep.
And fundamentally, it does make sense in this environment, as in, if the economy opens back up, you're not going to see as big of a benefit, right? You're not going to see Amazon tank below 2,000 or something, I don't think, but you're not going to see as big of a benefit if everybody else is open back up. If everybody's shut down, and that's kind of the fear. Maybe we're getting a little ahead of ourselves. Maybe the S&P shouldn't be so high because companies are still going to get hurt. And if companies are still going to get hurt, Amazon's still going to be crushing orders that they can't even keep up with.
Right. And so that is on your left-hand side of the ledger, folks. On the right-hand side of the ledger, asset-wise, Amazon has been able to take advantage of basically lower prices, meaning when they're buying things. The deal they did last week, now we don't know the exact number. When they come out with their numbers, though, some analysts will dig right into their quarterlies as to what those 12 planes cost them on the lease. But, they leased 12 more planes. We all know that, the stories about planes being just sitting somewhere is out there. And they took these large planes and they're converting them to cargo planes. So that's where it's pretty cool if you get in business. And then imagine on your expense side, right, that the bottom line is that you're bringing those expenses down dramatically. When we're talking planes, you're talking dramatic numbers, folks, okay?
Yeah.
So.
Yeah, and you can see, they're obviously a company like Amazon. Apple's got $120 billion in cash or something like that. You're going to be able to take advantage of deals if they show up. Now, there was some reason why, who knows who started that speculation with Amazon and AMC, but those types of deals, man, they're going to be ripe for the taking if any of those executives think that they can make them benefit in the long run.
Right. And, if we go back a few years, who thought that, you start off as a bookstore, all of a sudden you buy Whole Foods, and, guess what? You don't even hear as much anymore that it's whole paycheck. What I hear more than anything, and this is only from a few folks that go there, and one of them is Nico, of course, okay? Because what happens is that Nico's always hunting for good meat, folks, okay? That's his deal. And he always is so happy. He says, it's so great going to Whole Foods because they always have the best meat now, and they always have plenty of meat. And it just cracks. But guess what? They should, right?
They should. And you're probably paying for it, but, you want the best meat, it's going to be at those premium shops, man. And guess what? The premium shop now owned and operated by Jeff Bezos and Amazon.
Amazing. Dow's off 290, Nasdaq's off 19, S&Ps are off 29, gold's up 23, $23. Stay right there, Tommy and I come right back, folks.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down 256. You got the Nasdaq off 7, S&Ps are off 25, and that the NQs, man. The bottom line is that this is going to be pretty wild watching this shake out because the NQs right now are up $48, and they got some momentum behind them, man. They're getting away from these highs, meaning getting a lot higher pretty quickly. So
things are accelerating, man. It's an interesting conversation with Jose talking about Apple and Microsoft, right? Microsoft was one of the quickest rebounders of this V formation, man, in terms of by April 16th, it was already back up to almost 180. And so, whereas Apple, so let's see, on April 17th, it was back at 180. You were at 190 for the all-time highs, but Apple lagged, and then it's picked up some real steam because you go to April 17th. Yeah, look at this. You're only sitting at 281. Right? And you were up as high as 330, and Apple has charged almost 340 from that price tag. It'd be interesting to see how it all plays out, man, because Microsoft, it's real easy in my head fundamentally to argue for the long-term benefit in terms of computing, Windows, Microsoft Teams, their cloud, what's going on. Apple, everybody already needed phones and apps and all that, but they're going to be in good shape. But it's just remarkable to see Apple actually catching up and then plowing ahead of Microsoft after that rebound.
Yeah, there's no doubt, man. And hey, we'll see how far they can go. I mean,
we'll find out exactly. But all of them doing well, man. All of them doing well.
And you got, the bottom line. You've heard me say this many times, man. I mean, the chip stocks can drag the NDX up. The rest of the market's up or down. And, we'll see. We look at the S&P right now. It's down 25 points. But guess what? It didn't even get to a low of yesterday. The low of yesterday inside the futures, folks, was 3183. We got to 3190. So unless you get a major failure out here today inside of the NDX, this is going to be a wild market. Something that, I brought up yesterday, and this is pretty cool, folks, okay, because we'll see if this is a blow off top, but I want to show you something. See these volumes on the NASDAQ? This is basically almost unheard of. We had 6.5 billion yesterday. No, 6.1 billion yesterday, 6.5 on Friday, and 6 billion on Thursday. Now, those numbers, folks, are extraordinary. That they're actually 2 billion, about 1.7 billion to 2 billion higher than normal. And so what a definition of a blow-off top is this. So what ends up happening is this, is that you get a volume that's extraordinary. And what that is that is like everyone is in, and now who you're going to sell to. Now,
yes.
You don't know that that's happening until you actually come off a high, and then you have to come off that high with monster volume on the way down. But that's certainly a heads up, man. I mean, we were averaging 4.1 billion, and you go to 6.1, 6.5 in 3 days.
And what was that volume for again? Sorry, the NASDAQ? Or
we did 6.1 billion yesterday.
What index? Sorry, what index?
This is the NASDAQ.
NASDAQ, cool. That's all. Okay, yeah.
You had 6.1 yesterday, 6.5 on Friday, and 6 billion on Thursday. And you can see if you're watching the Tiger TV right now, folks, a big day in the NASDAQ's 4.2, 4.3.
Yes, right.
So that is a monster number.
Not to joke, we've had some pretty big days since April 13th in the market too. You know what I mean?
Yeah.
That it's not like it's been calmness and now it's jumping out. We've had some real market volatility. So yeah, those are big numbers, man, for sure.
There's big numbers, and you can see the NASDAQ's dragging the S&P up with it right now, man.
Yeah.
So let's take a look at some of the higher volume equities out here.
Can't wait to read the case studies on why we're at all-time highs with unemployment at 13.3%. But forward-looking, man, forward-looking.
Yeah. Well, I was listening to you when you said that it was pretty interesting, the chart you put up this morning with the, was it the unemployment from 2007, those numbers?
Let's see if I still
2008
have it.
And then this year,
I don't think I still have it up. Yeah, it just had to do with weekly jobless claims. I'll find the article, but
so some of the
here we go. You know what? Before we jump away, why not? Just because I have it, and it had to do. So this is Joe Weisenthal over at Bloomberg, and he was talking about, everybody's saying, how does this make sense, right? How are we at all-time highs with everything going on, millions of people losing their jobs? One indicator you could look at is that the connection the economy has as stocks go up. You can clearly see. So in the white, you have the S&P with the big rebound. In the red, you have initial jobless claims. So as jobless claims have decreased, the market's picked up. You back it up to 2009, pretty cool that we had the market at lows right when we had weekly jobless claims at highs. As weekly jobless claims started to decrease, that's when the market started to realize it was time to turn around. And you back it up for the full stretch from 2008 to 2020, man. You can't deny those trends that go in there. So one possible thing that you could argue, right, is putting fuel under this fire, as you can't argue with those trends, man. And the trend's eventually going to get us back to normal. How long that takes is really what the debate is about.
No doubt. And if we take a look at these higher volume equities out here today, Hertz is number one. Now, Hertz is they've already told you they're going bankrupt. In fact, they already filed. I think that's trading at $5. Okay, it's like, really, is it worth $5? You get Macy's is down 26 cents. They're opening. They opened 400 stores. American Airlines.
They have their numbers too, I think, today. Yeah.
Yeah. You got American down $1.92. You got United off $3.33. Now, so check this out. Let's go to United, because that's nothing compared to where we were this morning. So they're buying the dip once again, folks. So the bottom line is that United was at $41.50 this morning. It's already up $3 from that number. This is the Robin Hoods, folks. We're all going to start understanding, what Robin Hood is all about. And I was digging into it last night. So check it out. They got 10 million accounts. And many of these accounts, folks, are only $10,000 or $20,000, $15,000, okay? But the bottom line, when you start getting 10 million accounts at that number on your cell phone, they like anyone else, low number stocks, so you can put a small amount up and make a bigger percentage, okay? But that's the phenomena that we're seeing out here. And it doesn't mean that it can stay like this forever. And, just because there's more as you hit, what ends up happening when you get a reversal, you get a reversal. But my take is that that's what we do have happening, and you can actually see it pretty cool today inside of the higher equities. how fast they've already come back. Look at Norwegian Cruise Lines. That was down 10%. Now it's only down 5%. So it was trading at $23. Now it's at $25.
There's so much volatility, too, and so much uncertainty that the market isn't quite sure whether companies are going to be around in 3, 4, 5 years. And if you as an investor are able to figure out, right, that, because it's not often in history that so many companies are flirting with going out of business.
Right.
So you're seeing these massive fluctuations of capitalization, market capitalization, because the market can't quite figure out with great certainty what that should be. So on a daily basis, you know, with the wind it goes, man, and it's just crazy moves because the market really isn't sure with everything up in the air.
No doubt.
Yeah.
Dow Industrials right now down 175. Nasdaq went positive, up 6. S&P's down 18. Come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien, they have outlawed red paint, folks.
You better talk quick, man. That NASDAQ's going to be at 10,000 before we finish.
Seriously, man. They've outlawed red paint. There's no doubt about it. Okay, so if we take a look at the Qs, right, yeah, you're going to see this. The Qs right now, the all-time high in February, folks, is 237. We're at 242.
Yeah, crushing it, man.
That's about as intense.
Look
as
at that
got.
channel from the March lows. Whew, it's just craziness.
What's really intriguing here? You can really make the case, which you were making with AMC, is that okay? Why is it higher than in February? I mean, you're talking about 100 stocks, but it's like, okay, well, how does that work?
So here's the thing, right? If you assign me that paper topic as a graduate student, as a high school student, whatever you are, right? As a student, I can probably figure out how to make the case for the NASDAQ 100. Good luck making that case with AMC movie theater chains, folks. Yeah. That's all, know?
All right.
It's crazy,
no
man.
doubt.
But there's craziness everywhere. And it might be right. It might be right because movie theater chains aren't going away, too. They aren't. That's a cool experience, man. You want to go to a cool experience, right? You want to see these big movies. You want to do that stuff 6 months, 12 months down the line. I don't know. But there's so many other great opportunities. That's the one thing. When you look at some of these stocks, I say, yeah, maybe that's a good investment. But why are you buying AMC at the price it was at before the market when you could go buy something else that's, that's what really I focus on myself.
Pretty wild, man. No doubt. And gold, gold's catching the bid, folks. That's the bottom line, is that, it came back to the breakout area last Friday, rejected lower price, had lighter volume, start the movement yesterday. We're going to have big volume in gold today.
And we get, as if you don't have enough action, man, we got a Fed meeting start today, and we got Powell out there tomorrow, man. It just doesn't stop.
We got to love it.
Yep.
Stay right there, folks. Think or Swim coming up next. NMM, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.